Has the stock market finally bottomed out, or is this just another bear market rally waiting to trap unsuspecting buyers? In our last video, we introduced our proven 5-step checklist to help you determine when it might be safe to start buying stocks again. But the question remains, is now the right time to buy? In this crucial follow-up video, we'll take a fresh look at the market and put our 5-step checklist to the test. By the end of this video, you'll have a clear understanding of where the NASDAQ may be headed next, empowering you to make informed trading decisions with confidence. Plus, make sure you stick around until the end of this video where we'll share a special bonus tip about one potential gotcha that you absolutely must be aware of in the current market environment. Trust me, you don't want to miss this. I'm Rick Petticelli, head stock analyst at Morpheus Trading Group, and I've been mastering the art of swing trading for over 20 years. If you're ready to navigate this market with clarity and precision, hit that like button, subscribe to our channel for more cutting-edge insights like this. Now, let's dive in and see what our 5-step market bottom checklist reveals about the current state of the stock market. All right, we're looking at the NASDAQ Composite daily chart. We have the 8 EMA, the green moving average. Then we have the blue 20 EMA, red 50 SMA, gray white 100 SMA, and the yellow 200 SMA. And below that is the volume for the NASDAQ Composite. So in our last video, we went over the 5 steps or the 5 signals. So let's run through this checklist we have. First up is signal number 1. We're looking for a major stock market index to set higher lows. Now we're reviewing the NASDAQ Composite, but this analysis can also be done on the S&P 500 and the Russell 2000, the S&P 400 if you want. But for tonight, we're doing it on the NASDAQ Composite. So is the NASDAQ Composite setting higher lows? So we have this a higher low in place on 425, which was confirmed by the move on 426 over the high of 423. That's technically a higher low in place. So there's a higher low in place, and we are on day 1, 2, 3, 4, 5, 6, 7, 8 of a new rally attempt. So signal number 1 is the market setting higher lows, and we can check that off as a yes. Signal number 2 is there a bullish volume pattern in place? Specifically, have we seen a strong accumulation day where the index is up 1.5% or more on higher volume? And this bullish accumulation day must come on day 4 or later of the new rally attempt. So if we count days here, we're on 1, 2, 3, 4. Day 4 was just a gap down reversal day with a powerful move off the lows of the session, but closed below the prior day's close. The very next day, there was a gap up on April 26th, which resulted in a 2% gain, but volume was lighter on the session, so technically not the accumulation day we're looking for. And then the next few days are down days on a pickup in volume, so not exactly what we're looking for at the start of a new market rally. So signal number 2, bullish accumulation day in place, that is a no. Now signal number 3 takes on more significance if signal number 2 is a yes. But in terms of are there stocks setting up, while we have a handful of stocks like Shark Ninja SN or Kava that are trading near highs, DELL still setting higher lows. There's a handful of decent stocks out there, but it's not a great list. And there's a very limited amount of leadership right now. And that's especially true if one is focused more on in the growth stock arena. So we have some patterns to buy out there. It's signal number 3. Are there stocks setting up for invalid buy patterns that are ready to move higher? If we were to grade it, it would probably be like a C, maybe even a D. And so signal number 4, like signal number 3, builds on the prior signal. And if we were to have stocks breaking out to new highs, are they holding up and pushing higher? Well, we can take a look at Wing, which broke out to new highs within the past few days. And although it bounced off the lows of the session, there's been no follow through the past few days. CMG broke out and it is in pullback mode, so we'll have to see how that holds up. Another stock that's recently shown some strength is VRT on a breakout, but it's stalled as well. And a few minutes ago, we mentioned Kava, and here's also a false breakout. But again, this signal number 4 is our stocks moving higher and holding on to their gains. So we've mentioned a few here that have pushed higher. They haven't been able to hold the breakout level, but can they hold on to at least half of the last wave up? is something we'll have to see over the next few days. So signal number 4 is to be determined. And now on to our final signal, the signal number 5, which is the market avoiding distribution. So let's go back to the daily chart of the Nasdaq Composite. And we see here there's a big pickup in volume on Tuesday where we see, nasty down day, a 2% down day on heavier volume, which comes just a few days after a 2% gain on lighter volume. And then we have Wednesday's action, which is showing up as higher volume on one data source that we have. And on TradingView, it's showing up as slightly lighter, but there's a potential distribution day again with Wednesday's 0.3% loss. So 2 consecutive distribution days on the board following a light volume, a rally off the lows and reclaim of the 21-day EMA isn't exactly ideal there. So, signal number 5 is no, we're not avoiding distribution. And I just wanted to go back a bit to signal number 4, where I mentioned that stocks move higher, are stocks moving higher, and are they holding on to their gains? We can also ask that question of the Nasdaq Composite, and is the Nasdaq able to push higher and hold on to its gains? And so for any index to be in a bull market, we like it to be above the 20-day EMA, a rising 20-day EMA, or after a significant correction, the 20 EMA may not be rising, but the price action is above the 20 EMA. So the Nasdaq did close above the 20 EMA on April 26th and on April 29th, but lost the 20-day EMA on Tuesday and stalled at the 20-day EMA on Wednesday and closed near the lows of the sessions. So we can say that the Nasdaq isn't really satisfying signal number 4 either, as it's unable to hold on to gains. Now keep in mind, our analysis is always one day at a time because we just don't know what tomorrow brings. For example, the Nasdaq could open lower on Thursday and then, rip 2 to 3% higher on heavier volume on Thursday, and we would have a buy signal in place. And then we'd have to start this whole process over again with the exception of signal 1 because we have higher lows in place. So now we'd have signal number 2 satisfied, which would be a bullish a volume pattern. And so we'd have to go down the list again of signals 3, 4, and 5. And it could also be where the market just completely sells off for the next few days, rolls over, and takes out this prior low, which leaves us without any of the signals in place, really, because then we don't even have higher lows in place. So signal 1 wouldn't even be satisfied. So we'd be waiting for signal 1 to trigger yes before we can start this process again. And let's go over that bonus tip for those who stuck around to the end of this video. And we're going to talk about stocks that are showing relative strength, such as DELL, that's setting higher lows, versus the S&P, or the Nasdaq, which is setting lower lows the past few weeks. So this is a clear sign of relative strength. So while it's very important to monitor stocks that are showing relative strength, as they have the potential to lead the market higher once the market reverses, we don't want to get too caught up in trying to get too cute with entries in these leading stocks before the market is showing signs of reversing, satisfying those 5 steps we have. Because these relative strength stocks, while they're holding up well, they likely won't be able to make much progress until the market is on stronger footing. So you're looking at best breaking even and possibly making a bit of money in these relative strength stocks prior to a true buy signal. And sometimes really you might not even see a market bottom out until these relative strength stocks finally crack. And maybe that would be something along the lines of DELL breaking down below the 50 here and possibly testing the 106 level and then reversing quickly back up through the 50 MA and then pushing higher. So while the concept of relative strength is great, we want to avoid getting too caught up in trying to get too cute with buy entries prior to there being a true buy signal in the market. All right, traders, let's recap what we've covered in this essential video. We took our proven 5-step market bottom checklist and applied it to the current stock market conditions, focusing on the Nasdaq. By examining key factors like higher lows, volume patterns, and distribution days, we've gained valuable insights into where the market may be headed next. Or at the very least, we know that a true buy signal is yet not in place. Mastering techniques like this 5-step checklist is crucial to improving your trading performance and adapting to changing market conditions. That's why we've created the groundbreaking Morpheus Trading Academy to provide you with the tools, knowledge, and support you need to succeed in any market environment. As a valued member of the MTG tribe, you have the exclusive opportunity to become a VIP founding member of the Academy and unlock a world of trading mastery. To learn more and claim your spot before the May 31st deadline, press the link in the comments below and visit academy.morpheustrading.com. Don't forget to check out the hand-picked videos in the video ending section for more actionable insights. As always, remember to trade what you see, not what you think. Stay disciplined, trust your process, and never stop learning. We'll see you in the next video.